What's up, everyone? It's Eric from Option Edge, and I am proud to show you today one of my favorite triggers for getting long in a particular stock. And I'm going to show you how I do this. And the first step is I use this back testing software called Trade Machine Pro. Basically, it takes you can do any type of trading strategy, options trading strategy, and this will look back test it, look back at historical data, apply your trading strategy, and see how well you would have won or lost had you applied that strategy. So this is what we're doing. I have a list of different stocks: Lululemon, Starbucks, Work, Procter & Gamble, blah blah blah. And I have the parameters for this trade. We're buying a 40 delta call with 30 days till expiration. We're not trading earnings. We have some technical parameters that I'm going to show you in a little bit. And we're closing the trade if at the end of the day we're at a 50% gain, or at the end of the day we're at a 50% loss. Okay. So with all those parameters set, and with these tickers, we have a 53% average trade gain. Okay. So that's a pretty good gain. And if we look at the win percentage, we are 50 or greater. So 65, 150, 76.9, blah, blah, blah. You get it. Okay. So this is getting long a 40 delta call with 30 days till it expiry. Okay. With my technicals applied. Okay. So I'm going to show you, but first I'm going to show you what it looks like without the technicals. Everything is the same, but we're not using the technicals. So basically, we're just opening calls every 30 days, regardless of where the stock is, okay? So let's go ahead and take a look at the backtest results for that. This is like our control group, okay? So here's the control group. This is if we were to take the same ticker symbols that in our experimental group that we just were looking at, the one with the technicals. So this one, we're no technicals, just opening calls every 30 days and closing them. And we can see that average return per trade is 8%. Okay, so 53 versus 8%. And then if you look at win percentage, average win percentage is less than 50. Okay, we got 38, 61 is our highest. Okay, whereas the other one, we had a couple with 100. So let me show you the technicals. Okay, so that's here's back to our experimental one with the great results. Win percentage 65% versus the other one, which was like 49. So here's the technical open. Okay, so we're going to open this trade when the stock crosses up through the 200-day moving average, and when the stock is already above the 10-day exponential moving average, and the 20-day RSI is below 70. Okay, so I'm going to explain each one of these parameters, and in a way it'll make sense to you, okay? Why the trigger is like a good trigger. So here we are, we have the 200-day moving average. So I'm going to pull up a stock. I got NVIDIA here. We're going to pull up PagerDuty because this literally triggered today. I'm going to take off the Bollinger Bands and I'm going to erase some of these. Hold on a second. All right, so this is PagerDuty, and this is the 200-day moving average, okay? So 200-day moving average, algorithms like to trade off of different moving averages, and so do humans. But anyway, the 200-day moving average, when the stock falls below it, there's usually some downward momentum to the downside, and when stocks come up through it, there's usually momentum to the upside. So that's why this is a pretty good trigger. And you can see a lot of times stocks will touch, and the 200-day will act as major support. You can see here it sort of did that. It broke underneath for a little bit. But basically, this trigger is going and saying, hey, let's look when the stock is below the 200-day moving average, and then boom, it crosses up through. And it's like saying, what is it like to have bought calls when this crosses up through? So you can see here, it's gone on to do pretty well, went pretty well above the 200-day moving average there. Here's another situation. We go down below it. We come up right back up through it, and you can see real good trade results. Here, we technically closed underneath it, and then the next day, boom, right above it. And then the next time it happened, boom, we're above, we're back down, open above, Same thing happened here. So the backtester is essentially opening and closing positions based on this 200-day technical parameter. But we have two other technical parameters that must be met as well. So let me add the other one, which was the 10-day moving average, exponential moving average, okay? So bear with me. All right, I'm about to set the 10-day exponential moving average. Okay, and then I'm gonna erase this so we can get a better look. So the 10-day moving average, exponential moving average, is a indicator that algorithms and humans like to use to see if the stock has momentum. Yeah, so the 10-day exponential moving average is an indicator that traders like to use to show whether the stock has momentum. Okay, so if it's above the 10-day moving average, that means that the stock has a little bit of some juice to it. Okay, so then the final technical parameter that we're going to look at is so that was the 10-day exponential moving average. And then we have the RSI, which is the relative strength index. Okay, so the relative strength index, let's go back to the chart. It's a chart where it measures basically how oversold and overbought the stock tends to be. So if a stock is below this 30, let me move my face here. You can see that this line's 30, and then up here that line's 70. Basically, it's thought that once you hit below 30, that's a sign of major overselling. Okay. So that would be some people like to get long when there's major overselling. And then also we have when the stock gets above 70. Okay. So over 70 means the stock's been overbought. Okay. And you can see over here, if we look in the past, when we hit that RSI reading of 70, we started to drop. So basically this parameter here is making sure that we're not overbought. Okay. We're not an overbought situation. So just to review the technicals again, the 200-day moving average, making sure that we're going through it, is saying, hey, we're crossing up, and we were in a technical breakdown, technical failure. Now we're crossing up through one of maybe the most important moving averages, and now we're switching from technical failure to having a possibility of making a breakout. The 10-day exponential moving average helps us identify whether the stock has momentum, and then the RSI helps us identify whether the stock is overbought. Okay, so those are the three technicals I use, three parameters when deciding whether I should get long on one of these underlying stocks. So today, and then what I like to do, a tool I like to use is for real-time moving averages. I like to use movingaverages.com. This also comes from the same maker as Trade Machine, comes from CML Viz. So today I know, so for example, yesterday I know that the stock of PD, which is PagerDuty, was below the $40.05 price, which is what the 200-day moving average is. Today we crossed up above that. Okay, and then also we are above the 10-day moving average. And if we look over here, I can see the RSI, 20 RSI is almost 50, which is below 70. So this is valid for me to trade according to the criteria here. So let me enter PagerDuty in here. Okay. So if you were just to buy straight up calls, here's the backtest history. And you can see that 20 delta calls were historically, really profitable. But there's also different strategies that you can do. You could do, for example, put spread. So this way, as long as the stock, the stock doesn't have to move. It just can't drop. So here's, don't mind these other paints, but here's selling the 40 delta put and buying behind it the 20 delta put. A little bit less profitable, less of an average return compared to buying calls, but still pretty darn good. And so, yeah, this is a trade I took today, and I'll make another video for the type of strategy I use. I'll give you a hint. It wasn't straight up calls. It wasn't call spreads, and it wasn't put spreads either. So, but yeah, that's my favorite trigger. The trigger where it crosses up through that 200-day moving average. It's already above the 10-day exponential moving average, and the RSI is below 70. Try that out. It's not advice, but just some educational stuff. And if you like these videos, please like and subscribe. Peace out.